right. So today we're diving into something that I'm sure is pretty exciting for you. Um, you know, a raise at work, or maybe even a sudden windfall.
Oh, yeah.
We're talking about, those financial boosts that kind of feel like, winning the lottery in a way,
Right.
whether it's an inheritance or a bonus check or even a legal settlement. And you shared some details about what's going on, and it seems like you're in a really good place to make this money work for you.
Yeah. That's fantastic. It's not every day that we get to, kind of see that positive shift in someone's finances. And it sounds like you're approaching this with a really great mindset. What have you been thinking about doing with the extra money so far?
Well, I know it's important to be, responsible and all that, but I have to admit, the first thing that popped into my head was that trip to Italy I've been dreaming of.
Okay.
But then I remembered hearing about this thing called lifestyle inflation. And now I'm a little nervous about falling into that trap.
Oh yeah, that's a really smart observation. It's easy to kind of get swept up in the excitement and start upgrading everything all at once, but that's precisely where a lot of people go wrong. Lifestyle inflation is so sneaky because it happens gradually. Suddenly those daily lattes and fancy dinners become the norm,
Right.
and before you know it, you're back to feeling like you're living paycheck to paycheck even with a higher income.
Yikes.
Yeah.
I definitely don't want that to happen. So how do we avoid that slippery slope? I'm guessing it starts with a plan, right?
Absolutely. Having a solid financial plan is key. And the first step is really just taking a deep breath and hitting pause before you make any major spending decisions. Think of it like this. You wouldn't start renovating your kitchen without a blueprint, right?
Right.
A financial plan is kind of like that blueprint for your money. It helps you visualize your goals and make sure your spending aligns with those goals.
So, okay, blueprint analogy. I'm getting it. So where do we start building this financial blueprint?
Well, if you already have a budget, this is the perfect time to give it a refresh. And if not, there's no time like the present to create one.
Okay.
There are some great tools out there that can make budgeting a lot less painful, like YNB or Mint.
Yo, yeah, I've heard of those.
Yeah, these apps can connect your bank accounts and automatically track your spending so you can see exactly where your money is going.
Ah, technology to the rescue.
Uh,
But honestly, even with a fancy app, I sometimes feel like budgeting just means restricting myself and missing out on the fun stuff.
I hear that. It's definitely not the most glamorous part of personal finance. But here's the thing. A budget isn't about deprivation. It's about empowerment.
Yeah.
It gives you the power to make conscious choices about your spending and prioritize what truly matters to you. Think of it this way. You mentioned wanting to take a trip to Italy, right?
Yeah.
A well-crafted budget can actually help you make that dream a reality sooner.
Wait, really? Tell me more about how that works.
Well, when you have a clear picture of your income and expenses, you can identify areas where you can potentially cut back or save more.
Maybe it's packing your lunch a few times a week instead of eating out, or finding a more affordable gym membership. Those seemingly small changes can add up over time, freeing up that extra cash to put towards your travel fund.
Okay, that makes a lot of sense. So we're using the budget to free up cash for the fun stuff, not just restrict ourselves. Got it. But what about those less exciting but equally important financial goals, like building an emergency fund?
You're absolutely right. We can't forget about the less glamorous but essential aspects of financial health. And you've hit on a big one, the emergency fund.
Yeah.
It's like your financial safety net there to catch you if unexpected expenses pop up, like a car repair or a sudden medical bill.
Yeah, those unexpected expenses always seem to come at the worst possible time. So how much should we aim to have in this emergency fund? Most experts recommend having at least 3 to 6 months worth of living expenses stashed away in a high-yield savings account. It might seem like a lot, but trust me, it's worth it for the peace of mind it provides. And with this extra income, you're in a great position to bolster that fund and give yourself a little extra cushion.
All right, budget and emergency fund. Check and check. Feeling more financially secure already. But I know there's more to this financial puzzle, right? What about things like paying down debt and investing?
You're reading my mind. Those are definitely key pieces of the puzzle, and we'll dive into those right after.
Okay, so we've got our budget in good shape, and our emergency fund is looking nice and healthy. That feeling of financial security is definitely starting to sink in. But now I'm curious about the next level. Tackling debt and maybe even dipping my toes into the world of investing. Where do we begin with that?
It's great that you're thinking about these long-term strategies. Let's start with debt, since high-interest debt can really eat into your financial progress. Do you have any credit card debt or other high-interest loans you'd like to tackle?
Honestly, I do have some credit card debt that's been lingering for a while. It's not a huge amount, but I know those interest rates can be killer.
You're right, those high interest rates can really add up. The good news is with this extra income, you have a fantastic opportunity to finally break free from that debt. There are two popular methods for paying down debt that we could explore: the debt avalanche and the debt snowball. Have you heard of those before?
I've heard the names, but I'm not exactly sure how they work. Is one better than the other?
They both have their pros and cons. The debt avalanche method focuses on paying off the debt with the highest interest rate first, regardless of the balance. This approach saves you the most money in interest charges over time. Imagine it like tackling the biggest, scariest monster first to get it out of the way. On the other hand, the debt snowball method targets the smallest debt first, regardless of the interest rate. This strategy can be more motivating because you get those quick wins early on, which can keep you going until you reach those bigger debts.
So Avalanche is the most mathematically efficient, and Snowball is more about the psychological boost.
Interesting. I can see how both approaches could be effective depending on your personality and financial situation.
Exactly. There's no one-size-fits-all answer. The best approach is the one that keeps you motivated and on track. But no matter which method you choose, the key is to be consistent and attack that debt with a vengeance.
Debt destruction mode activated. Okay, so let's say we've conquered the debt monster. What's next on our financial quest? I'm assuming it's time to talk about investing, right?
You got it. Investing is where the real magic of compound growth happens. It's how you put your money to work for you so it can grow over time. But before we dive into specific investments, it's important to understand your risk tolerance.
Risk tolerance. What does that mean exactly?
It's essentially how comfortable you are with the possibility of your investments going up and down in value. Some people are okay with a little volatility, while others prefer a more conservative approach. Figuring out your risk tolerance helps determine what types of investments are right for you. Makes sense. I guess I need to think about how much risk I'm willing to stomach in pursuit of those potential returns.
Exactly. And remember, there's no right or wrong answer. It's all about finding what feels right for you. Once you have a sense of your risk tolerance, we can start exploring different investment options.
Okay, let's talk options. I've had a lot of buzzwords thrown around. Stocks, bonds, mutual funds, ETFs. It can be a bit overwhelming. Where do we even begin?
It definitely can feel like a jungle out there. Let's start by breaking down some of those basic building blocks. Stocks represent ownership in a company. When you buy stock, you're essentially betting that the company will perform well and its value will increase. Bonds, on the other hand, are like loans you make to a company or government. They typically offer a fixed rate of return, making them a bit less risky than stocks. Then you have mutual funds and ETFs, which are baskets of stocks or bonds that allow you to diversify your investments across different companies or sectors.
So stocks are higher risk, higher reward, bonds are more stable, but potentially lower growth. And mutual funds and ETFs are like a pre-made mix of stocks and bonds, making it easier to diversify. Am I getting that right?
You got it. That's a great summary. The beauty of investing is that there are options for every risk tolerance and financial goal.
This is starting to make sense. But I have to admit, I still feel a little intimidated by the whole investing world. Where do you even buy stocks and bonds? Do I need to be like a Wall Street wizard to do this right?
Not at all. There are plenty of user-friendly online brokerage platforms that make investing accessible to everyone. These platforms allow you to buy and sell stocks, bonds, mutual funds, and ETFs with just a few clicks. Many even offer educational resources and tools to help you research different investments and make informed decisions.
That sounds way less intimidating than I imagined. But with so many options out there, how do I know which investments to choose? I'm not exactly a financial expert.
That's where a little research and perhaps some expert guidance can come in handy. There are tons of resources available online and in libraries that can teach you the basics of investing and help you develop a strategy. And if you're feeling overwhelmed, don't be afraid to consult with a financial advisor. They can help you create a personalized investment plan tailored to your specific goals and risk tolerance.
Okay, so we've covered a lot of ground here: budgeting, debt management, and now even investing. It's starting to feel like I have a real roadmap for making this windfall work for me. But I also know that financial planning isn't just about numbers and strategies. It's also about aligning your money with your values and dreams. Can we talk more about that?
Absolutely. That's what it's all about, making your money work for you, not the other way around. Let's explore how to connect your financial plan with your personal goals and aspirations.
We've talked about budgets, tackled debt, and even explored the world of investing. But what I'm really excited about is how to make this windfall align with the things I truly value. It's not just about the numbers, right?
You're exactly right. Financial planning is most effective when it's personalized. It's about connecting your money to your aspirations, whether that's early retirement, starting a business, or something else entirely.
So how do I make that connection? Where do I even begin?
Well, it starts with getting clear on what truly matters to you. What are your big picture dreams? What kind of lifestyle do you envision for yourself?
Well, financial freedom is definitely high on my list. I'd love to have the flexibility to work less, travel more, and maybe even pursue some passion projects that I've always put on hold.
Those are fantastic aspirations, and they're absolutely achievable with the right plan. One thing that really resonates with your goals is the concept of investing in your future self.
Investing in my future self, that sounds intriguing. What does that look like in practice?
It's about making choices today that will benefit you down the road. For example, you mentioned wanting to work less eventually. Could this windfall allow you to invest in additional training or education that could open up new career opportunities, or even allow you to transition to a more flexible work arrangement?
That's a really interesting idea. I hadn't thought about using the money for professional development in that way. It's like an investment in my earning potential down the line.
Exactly. Or maybe you could use some of the funds to pay off that high interest debt more aggressively, which would free up more cash flow in the future. It's about taking a long term view and making strategic decisions that set you up for success.
I'm starting to see how powerful this can be. It's like planting seeds today for a future harvest of financial freedom.
That's a great way to think about it. And remember, investing in yourself doesn't always have to involve spending money. It can also be about investing your time and energy in activities that support your well being and personal growth, like taking care of your health, learning new skills, or building meaningful relationships.
Those are all things I value. But sometimes it's hard to stay focused on my own goals when I see other people spending their money on things that seem flashy and exciting.
It's natural to feel that pull towards instant gratification, especially in a world where we're constantly bombarded with messages about what we should be buying or achieving. But remember, comparison is the thief of joy. The key is to stay grounded in your own values and define success on your own terms.
That's such an important reminder. It's easy to get caught up in the keeping up with the Joneses mentality. But ultimately, true wealth isn't about material possessions. It's about having the freedom and security to live a life that feels authentic and fulfilling.
Absolutely. And that sense of fulfillment looks different for everyone. For some, it might involve traveling the world. For others, it might be about spending more time with family or pursuing creative passions. The beauty of this windfall is that it gives you the opportunity to design a life that aligns with your unique vision.
This has been such an eye-opening conversation. I feel like I have a whole new perspective on how to approach this windfall. It's not just about spending or saving, it's about making conscious choices that reflect my values and move me closer to my long-term goals.
That's fantastic to hear. Remember, financial planning is a journey, not a destination. There will be twists and turns along the way, but as long as you stay grounded in your values and continue to learn and adapt, you're well on your way to creating a life of financial well-being and fulfillment.
And on that note, I think it's time to wrap up this deep dive. But before we go, I want to leave our listeners with one final thought. Imagine yourself a year from now. How do you want this windfall to have impacted your life? What goals will you have achieved? What experiences will you have created? Let that vision be your guide as you make decisions about how to use this money wisely and intentionally. Thanks for joining us on this financial adventure, and until next time, keep diving deep and keep learning.